All right, today we want to talk about dividend investing, especially for new investors, because I think that there's a lot of good content out there about why you should do dividend investing, but they don't really go through the full pros and cons of why you should do dividend investing and what are the hurdles of dividend investing. So the big reason why you should do dividend investing for a new investor is that it's going to show you immediate results. So once you buy that stock, within 3 months, typically the ex-dividend date will hit and you'll get a dividend. You'll see money coming in. It's great. So I think that's one of the big reasons why I'm a proponent for new investors to get into dividend investing. It really shows them the power of investing right in front of them. The other thing that it does is that it really uncomplicates investing. It really shows you what happens when you do investing. And when you take money as profit from your investments, if you don't have dividends, you're going to have to sell your stock to see those returns and actually use that money for spending on something else. If you have dividends though, those dividends will just be cash in your brokerage account that as you choose, you can pull it out and use it. So it really makes things less complicated for you if you want to use your profits from your investing for other things, other ventures, other whatever you want to do in your life. But now that's all been said, let's talk about the cons about dividend investing. So a dividend by no means it means that the stock is actually a good investment. A really high dividend actually could be a sign of stress on the stock, especially when it's only a momentarily high dividend yield. So a high dividend yield of like 10%, 20%. Well, what's going on is that either there's a one-time special dividend going out, and you really need to understand that, or the price of the stock has collapsed, which means that the dividend might drop as well the next quarter. So you have to really do some research when you see a high dividend. And by no means, if there's a good dividend, doesn't mean that it's a good investment. It doesn't matter if you make a 5% dividend if your stock falls 20%. It really doesn't help at all. It actually is worse. When a company chooses to give you a dividend, what they are saying is, hey, this company is making good cash, but we really don't know what else to do with this money. This could be, some of the investors that have a higher stake kind of forcing the issue. They want cash out of the company. But it also typically means that the business that you're investing in doesn't know what to invest that money in. So there's other choices for that. There's really 3 choices for that money. One is they can reinvest that money into the business. That means that they're going to get more equipment, they're going to build more software, they're going to do something with that money so that they can make you more money, increasing your stock value, which is also good. The second thing they can do is reinvest that money by buying dividends back. So these are share buybacks. And that's good because they are confident in the cash flow of the company and that you should get more of that cash flow. So when they buy back that stock, your individual stocks are worth more, so the price goes up. That's really good too. Typically companies that do that, they're usually buying out other companies to increase the value of your stock, but they may not have a good deal in front of them. So instead of holding on to cash, they're going to buy back shares, which will then, raise the value. Companies also will buy back shares if the value of the stock is too low, and they know because, they're basically insiders, but legally, they know that the company's worth more, so they will buy more shares, which will prop up the value of the stock to theoretically the right value because insiders should kind of know what's going on with the stock. And then if all those options are good and they're like, well, our stock is actually really well valued and we don't want to buy more right now, they'll just give you a dividend. They'll just give you the cash and say, hey, you figure out how to invest it or do whatever you want with it. So you should understand that it's really more than just a requirement to give you money. it's a choice. It's an investment choice that the company made, and they think the best choice for that money is for you to figure out how to invest it. Finally, a lot of people do like a discounted cash flow on dividends, and none of that makes sense. Dividends have no correlation to the value of the company. The best way to figure out the value of a company is by basically their income balance statements, all the financials. You got to decipher the value from their reporting, which might be a little strenuous and tedious for some new investors. But that's really the way you have to figure out the value of the company. Doing a discounted cash flow on the dividend doesn't make any sense, because that is just made up by the board of directors. They just make that up and they can unmake it whenever they feel like it. Now, the value of it and why people probably tend to do it is most companies that are known as dividend companies, they've had a consistent dividend for decades. But that's by no means a reason why to believe that the discounted dividend model is going to work. You really need to do like a discounted cash flow model, dividend earnings, or not a dividend earnings, a discounted earnings cash flow, something else, just not dividends. Dividends is the one thing that can just be made up. So it really isn't a good metric. The cash and the earnings are a little harder for them to just make up. It really does represent, the best metric you can use to do a discounted value analysis on it. Well, I hope you like this. I hope this was helpful, especially for new investors. If you like this kind of stuff, you want to see more, please, subscribe, helps us with the algorithm. And also check out stockbossip.com. Stockbossip has really good ideas if you want to get some more income into your portfolio, or especially if you're a new investor and you're really nervous about how to start investing. Like, what do you choose? What's the picks? Well, we have the right picks on page 1 for you. It is the top stocks rated by our whole community. So you have thousands of people giving you insight there, and it's all aggregated into a top rating that you can find really easily. Just go to the front page, stockbossip.com, or check out our app in the Google and Apple Play stores. Thank you for watching.